Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined down the line by John Eade, who is president at Argus Research and knows everything, certainly about the US markets and the global markets. So it's great to have him back online. How are you today, John?
Matt, I'm terrific, and I hope I don't disappoint you based on that introduction.
Fantastic. Thank you. Good to speak to you, John. Now, just off air, we were talking about a headline about how you're positioning now, or what you're telling clients about US equities, and just tell our viewers what you're now saying to your clients.
Yeah, Matt, caution, okay?
Caution. Okay.
We've been bullish for 8+ years, and we still see some more upside in the market. The bull run's not over now. However, the valuations have pushed higher, and we think there may be only another 8 to 10% left in this rally. So, we're thinking about late cycle stocks and also starting to make some defensive movements in client portfolios.
And when you say defensive movements, are you looking at defensive stocks, or are you looking to actually move out of equities entirely?
Well, both. So maybe shave a few percentage points off an equity allocation, and also within that equity allocation, maybe take some profits for some high flyers and focus more on some value stocks or some companies that pay consistent dividends. So a couple different ways to become a bit more cautious with your portfolios.
Understood. So yeah, interesting to hear the bullish theme, or this bullish run maybe is running out of steam after 8 years. So that's very interesting. How do you see the dollar? Obviously has weakened, and we've talked about that previously on this show. Where do you think the dollar can go from here, and what impact can that have on corporate earnings?
Well, it's positive impact, and we do think the dollar's going lower. So, despite an overall cautious outlook, we're probably going to be raising our earnings estimates for 2017 and 2018 based on the weaker dollar. So there definitely is that support. And here in the U.S. and also around the world, interest rates remain near historical lows. So that's another positive support too. But looking out, 6 to 12 months, we think these, planks of the platform probably won't be as strong. Again, right now we see more upside, but just thinking a little bit more cautious down the road.
Understood. And looking at Treasury yields as well, being as low as they are, would you be moving into bonds and certainly US government debt, or looking at cash as an alternative? What's the play there?
Well, corporate yields are still reasonably higher than Treasury yields. And if you move into AAA or AA rated corporates, with a good economy, I don't think you have much of default risk. So that's a place to get a little higher yield than in the Treasury markets.
Understood. And obviously Hurricane Irma over the recent week or weeks, how do you think that's going to affect certainly GDP going forward, and will this affect the Fed in any way?
Well, we think the GDP is pretty strong here, right? We had a good second quarter of around 3% growth. The hurricanes are certainly going to be an issue in the third quarter, but then there's a lot of rebuilding too. The consumer spending has been strong. The government may kick in some money. So I think we're okay for GDP, into the third quarter, into the fourth quarter, but it may be the first half of next year, particularly if the Federal Reserve is reducing its balance sheet and short-term interest rates are drifting higher, where we may see more of a slowdown.
Understood. And finally, sorry to put you on the spot, but do you have any particular equity plays at the moment? Anything that is looking interesting and something that our viewers maybe should take a look at?
Well, a couple couple of ideas. One is a big payroll processing company here in the U.S., Automatic Data Processing. It's been a well-managed company. The stock's done well, but there's an activist investor who's trying to get even more return out of this stock. So I think there's some upside left in a company like Automatic Data Processing. And we also recently increased our ratings on 2 biotech stocks, Celgene and Gilead Sciences. So a couple of ideas in healthcare too.
Super. Well, John, as ever, thank you so much for joining us down the line. Enjoy the rest of your day over in the States and look forward to having you back on the show very soon.
Thanks, Matt.